Guys, welcome back to another video at the Capital Traders Group. Now in this video I'll be going through how I formulated my own and effective strategy using what I like to call the 3-drive move. Now before jumping in, please leave a like and subscribe. It does help me out a lot and the algorithm. But without further ado, let's get right into it. Now what Wyckoff theory is, it's quite unusual and complicated to trade. But I'm gonna show you example of what Wyckoff schematic is. Now this is an example of distribution schematic. Now there are different types of examples of Wyckoff, but I'm just gonna in this video I'm gonna be explaining one. So this is distribution, in essence, where you see price distribute before you see big pushes down in the market. In essence, I'm not going to be breaking down each and everything this means. Again, it's going to overcomplicate it, and I want to simplify it a lot, which I'll go through in a moment. But this is just an example of what Wyckoff in essence is. It's price action that the big boys use to distribute orders. Okay, this is the accumulation example. All right, it's the same schematic, it's just flipped upon its head. But yeah, you have different phases within this level, but it is complicated to trade, but using this strategy I have simplified. It is easier for you, but what you must understand is there is different types of Wyckoff schematics, okay, which is something I just shown. But in essence, it shows you examples of how smart money accumulates or distributes orders in different markets. Now this can be equities, currencies, commodities, and even crypto, okay. Now when I refer to smart money, what I mean is institutions, insurance companies, hedge funds, entities who have enough capital in order to move the markets, okay. But I won't be going into all the different types because I think one should be sufficient enough, especially schematic one, which is something you see more often in the market from what I've back tested alone. So again, they are long and confusing, but it's something I go into depth with and I teach to my mentorship students, and it can be very useful to learn, identify, but more importantly apply in the market. But after this video you will have a much better understanding, which you can hopefully use for accumulation and distribution and see how effective it is, as I'll show you momentarily. So let's go into the theory, okay. Now what the 3-drive strategy in essence is when you see liquidity previously taken from the other high. Now it's very simple to understand, right? You have one high, right? You see price push up higher, takes liquidity from this high. You have the next high, and then you have the same process repeat itself, where you have the most optimal high, the high above these three, and then you see a big push to the upside. Now what's important about this is when you see a shift in market structure. Now this is when you would like to look for a break of structure, okay? Because then it shows you that this 3-drive move is starting to play out effectively, okay? Because once you see that break of structure, you now understand that this is a potential Wyckoff or distribution taking place in the market. So what you would then do is you would wait for price to come back to what I refer to, or what's referred to as a premium zone. And the premium zone is what you refer to as anything above the 50% level, okay? Retracement. Now price will usually always pull back when you see this drive take place, this pattern take place, okay? And it will usually always come back to the 50% level, because the 50% level is the most optimal zone to sell. Okay, so if you're waiting for a pullback, you want to wait for the 50% level minimum. You can even refine this further by using price inefficiencies, because if such a heavy push down to the market is moved, it's a good sign that price is ready to push down even lower. But when you wait for a pullback, you can target what you refer to as again an imbalance, okay? Because price is going to likely come back within that zone to come fill that imbalance in before it's ready to make its next move, and that is where you can look for your entries, okay? I'm gonna again show you a example here on which is basically the same thing, but it's done in accumulation, okay? You have drive 1, drive 2, and drive 3. Very simple, okay? And when you see again that breaker structure, which gives you that intent, that is when you want to start looking for a pullback to look for a potential long, because now you understand that you seeing price accumulate. Institutions are buying heavily, which is causing this influx of price to push up, because price wouldn't push up is then if there's not enough sufficient buying volume from one zone. And when institutions or hedge funds like to accumulate, they like to accumulate at the most discounted regions or premium region. And discounted is what I mean below the previous high. And when you see stuff like this playing out, what you need to pay attention to in terms of the characteristic is the volume. Okay, when price made this first low, we saw that big impulse to the upside. Now price makes a second low, takes this liquidity, and then shows again strong buying volume. It may not break the high, but you're seeing strong buying volume take place. And then you can then understand that there's a potential third drive coming in. And when you see that play out, you can then look for a break of structure, because after that impulse is taking place, now you understand the big boys are accumulating. And a good way to, or easier way to see this is when you see a curvature in price, right? Is when you see some sort of curve in price like this. Okay, it makes it much more simpler to or easier to view when you're new and looking at the charts. Okay, you want to see a curvature if you're looking for accumulation or again distribution, right? A point of curvature. And then once you've seen that impulse and that intent after that break of structure is taking place, again you do the same thing. You wait for a pullback at least to the discounted zone, which is a discounted zone which is below the 50% zone if you're buying. Okay, very simple. Again, entry protocol, depending on how you trade, whether it's limit orders or confirmation. If it's a limit order, you wait for the 50%, you just set a limit below the previous high, and then you look to target the next supply region or the next liquidity point, wherever you want to target to. But in essence, that would give you a good enough reason, a good enough entry zone to understand that price is likely going to push up higher now, because the big boys are in essence accumulating their orders. Okay, so there's going to be a next influx in buy orders to push price even higher. Okay, so that in essence what you're looking for: drive 1, drive 2, and drive 3. Okay, it's very simple to understand this way, and it's something that I've used very effectively, and I'm going to show you a couple examples of how I've used it on BTC. Now if you look on the chart here, what do you see? All right, it should be very simple to understand. Now this is how I called the market top in March, and I cover and you can feel free to check this out in March on my Instagram, CP_traders, where I called this move out. I also called the March bottom, which I made a YouTube video about, which I'll show you guys shortly as well. But in essence, what do you see here? We see high number 1, high number 2, right? Institutions selling a portion of their orders to wait for price to come back up, and then fill in their final buy or their sell order, sorry. And then what do you see here? You wait for price to make a break of structure, giving you the intent of understanding price is ready to push down lower. So what do? You wait for price to come back to a premium zone or premium level to start selling. Again, what do you see here? Let's mark out the imbalance zone on the daily time frame. We have the imbalance low here, and then we have the imbalance high here. So you have a clear zone of imbalance here that is likely to get filled, right? And what does price do? It comes back up to fill this imbalance zone. Now from the previous video I talked about refining your entries. You should understand this: when you see imbalance zone, it may not always come in to fill the high of the imbalance, but what it will do most of the time is it will come back to at least fill the 50% level of the imbalance. And what does it do? It doesn't come back to the full of the imbalance, but it does come back to at least the 50% zone, which I'm going to cover shortly now. So I'll mark this out as supply. But in essence, why you see these 3 drives of liquidity, which I'm going to explain very quickly, is basically because the hedge funds, right, the institutions have to distribute the orders this way, and I'm going to explain why. Say you have $100 billion, right, markup position that you want to sell on, let's say on this example on BTC. You can't just sell at, let's say for example, this zone. You can't do that. Now the reason you can't, say I just want to put 100 billion sell orders in now, it's not possible. The reason why is if you just sell, actually before this gets messy, let me just explain it here. Now the reason you can't just sell here is because if you put that sell order in, price is gonna flash down heavily, and it's not gonna fill in your orders, right? From a hedge fund point of view, because you have too much capital, and it'll affect the market, and it create too much selling pressure. So what will end up happening? Your orders will get filled in lower, lower, and lower. And what this does is this is ineffective, because what it does is it increases your risk as your sell orders are getting lower and lower and lower, and it decreases your reward, because then say you're targeting this zone and your sells are getting lower and lower and lower, and by the time it hits your zone, you're left with little to no profit. So what they have to do is they have to manipulate price in order to get in their sell orders at the most premium zone. So they would, for example, sell, let's say 25, they'll sell 25 billion here, okay, and then you see that big influx, that big push to the downside, okay, before you see that next push up. So what they might do, they might have a small marker buy position to manipulate price to come back, take this liquidity, so they can put in another, let's say 25 billion here, okay, another 25 billion here, and then what do you see? That next push down, creating that buying, that selling momentum, and then they may even take another buy just to take that liquidity to then sell, let's say 50 billion at near the market top, because they understand price is going to now push up heavy, and now they can start getting rid of these buy orders they took to push price higher in order to fill in their main sell positions. Okay, so that should hopefully give you guys a better understanding of why you see these schematics or Wyckoff price action play out in the market. Okay, I hope that is that theory gives you guys a better understanding of why you see price action like this play out. So now in this example, now we've seen and we've waited for price to break structure, giving us the intent that price is ready to push down lower, and we've looked for optimal entry at the imbalance zone. Now, depending on what type of trader you are, you could just take a sell order at the 50% level, take put the SL above the previous high, the third drive high, and place your TP, let's say at the support region here, right, the support floor here on the higher time frames, right, which will give you a nice RR of 1 to 4. Okay, now that is something you can do, but one thing you need to understand about Wyckoff, or this 3 drive move, is it plays out on all time frames, because price is fractal. Now I've made videos about this before on YouTube, so feel free to check that out, but you'll see the same patterns repeat themselves on the higher time frame, on the weekly, on the monthly, on the daily. On the same things, you'll see the same sort of patterns formulate on the low time frames, on the 4 hour, the 1 hour, the 15, and the 5, and even the 1 minute. Okay, so if we scope down on the lower time frames, let's see what happens. Okay, so now with this narrative, what do you see? Let's get rid of this. What do you see in essence playing out? Now we understand price is coming back into the 50% zone. Let's put this here. So you understand price coming back to the 50% zone. Now we can start looking for sells. But now price has come in and filled in that imbalance zone. So now we know we can start looking for sells, right, on the low time frame. But what do you see here? Now I'm going to let you guys see if you can spot it, but you should do now. What do you see? It's a bit more subtle, but you should be able to see it. I'll mark it out here using the highlighter. One sec, here you go. Drive 1. Drive 2, again, take that liquidity above the high, and then comes back for that third drive, takes that liquidity, okay? Doesn't break structure to the high, right? Doesn't break structure to the high, and pushes down, right? We see that those influxes in price. So now you're seeing sort of this curvature in price. What do? Right? You understand price has now broken structure here to the left. It's given us a BOS, right, which means there's intent for price to come back down lower. So what do? You can refine your zone. Now you understand there is a bit of an imbalance. If we go on the 1 hour, you should be able to see it. Now there is a bit of an imbalance left here, right? There's imbalance here. We just have clear sell side, or clear selling pressure, sorry. So now price needs to at least come back and fill this zone. So what do? you can either look for the 50% of this region, which is something I would do. I'd look for the 50%, let's say, right, the 50% zone. So look for price to come back in this zone, because we're seeing that same sort of those three drives play out, and we've seen that intent or breaker structure showing that there's selling pressure to come down. So we want to look for entry at the most premium zone. So I'd set a limit at the 50% zone, because we already have confirmation. We have the daily distribution taking place, and we have the 4-hourly distribution taking place. Now, another thing I should mention is when you see distribution take place on the higher time frame, like the weekly, daily, the 4-hour, maybe even the 1 hour, it's much more valid because manipulation takes place on the lower time frames. So when you see it play out on the higher time frame, it gives you this setup much more validity. Okay, but in this scenario, I'd place a limit order at the 50% zone, filling in that imbalance and targeting this low. Right, my first target would be this low, but because it's playing out on the higher time frame as well, my main swing target would obviously be the next main demand zone, which is all the way down here, okay, which now offers a RR of 1-2-14. Now let's see how price plays. Right, you see it, price comes back to the 50% level, fills in that imbalance, and then pushes down. Right, where you see it play out beautifully. Okay, now you could have had the, if I show you here, you could have had the swing set up, right? Take out the 50% of the imbalance on the daily, above the high after the 3 drives. It was still good. It would have given you a nice swing position of a 4RR, and you could have even scaled in and refined it on the lower time frame, because it gave that double confirmation, gave another 3 drives on after the imbalance was filled, increasing the probability of the move. So then you'd understand this is a very high probability setup taking place. I hope that you guys understood that. I tried to make it as simple as I could. I'll give you a couple more examples. Now, when price came into this demand zone in March, where the everyone was calling the bear market to be over because of how fast this price pushed down, where I said no, it's not, we're going to see another push up. Okay, and to prove this, this was my second video. It's called BTC is the bull run over, and I posted it on YouTube a year ago. So go check it out now, and it'll give you a bit more in-depth of understanding of my analysis. But in essence, what I was looking for is accumulation to take place, which was using a different sort of schematic, which was schematic 2. But in essence, I'll leave a screenshot of it here. But this was the basically the accumulation range, where I was taking buys and I was leaving where I said price is likely going to react from. And what do you see? Right, we see price play out and react from that level very well. Again, I'll leave a screenshot of that here so you guys can see for yourself. This was documented. I made a free YouTube video about making the call public. There's a proof for you guys there. But also, I have one more setup which I shared publicly as well. It was about, I think, 2 months ago now, and it was basically called, I think it was called Bitcoin Bull Trap. I know some of you guys might remember that, but in essence, it was this setup here. And I'll show you guys, which you guys should understand now. What do you see here? Right, we see those 3 drives of liquidity, okay? What do we see? Point 1, you have that bearish push down. Point 2, we have a smaller push down. But in essence, after that 3rd push, we saw that big push down, and then we saw that breaker structure to the left, giving us intent. So what do you see? Price breaks the lower structure of this zone, right? Which is the reason why I was calling the push down. And by the way, I got a lot of hate comments on that video as well. People were saying, "Oh, you're crazy. You don't know what you're doing." Simply, well, it happens a lot because, you know, people react off emotions. They don't understand or formulate price action data the correct way. So I didn't really care, but it was funny to see how many hate comments I actually got off that video. But in essence, we've seen that competitive breaker structure giving us intent. Then you see price push up, right, come back and retest that previous structure point and fill in all this imbalance, right? The 50% of that zone of that imbalance at least. And then again, what did it do? Create that big push down, right? And it left a bit of imbalance, right, above. So then what did it do? It came back, right, broke the structure low again, right, giving us more intent. And then once we waited for price to come back above the 50% zone, right, we could understand that it was ready to take shorts. And this is why I was so strong on my bias for shorts. And what did price do? It came back and it took the 17.5k long. So now you understand why I was short on the market at the time where people were calling for macro, because I understood. I simply utilized the strategy in Wyckoff effectively. So yeah, with all that said and done, I hope you guys enjoyed this video. I tried to make it simple as I can without getting too much into depth. But if you guys enjoy this video, please like and subscribe. It helps me out a lot. It helps the algorithm. Please leave a comment as well. Let me know what you guys think of this videos. It motivates me to make more videos for you guys, because at least it lets me know that you guys are actually finding value from this and actually enjoy this. So it makes me want to make more videos that way. So please do all that stuff. And if you guys want to support or want to learn, we have the premium analysis service where I share my personal trades and my analysis over the whole macro and micro perspective of the market. I'm also currently doing a 10k crypto challenge, so feel free to check that out. And but by Christmas, I'm launching the mentorship program for people who want to take trading serious as a real career and want to learn how to do it profitably and effectively to get funded and scale their own personal funds, which will be very descriptive, as I've taught over quite a few students. So that's why I'm making this program, for something to be more community based and helping people out together become actual professional traders and sort of network as well. So that's something that will be announced sooner than later. So with all that said and done, I hope you guys enjoy the video, and I'll see you in the next one. Bye bye.